The FCA is warning about crypto pump and dump scams. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee. Let's have a look at this article from Yahoo Finance, which is highlighting a warning from the FCA over in the UK, discussing pump and dump scams that are, well, quite prevalent in crypto if you're not familiar with it. Let's jump here first and have a look at this is from Investopedia, how a pump and dump scam works. So, a pump and dump scam is the illegal act of investor or group of investors promoting a stock they hold and selling once the stock price has risen following the surge in interest as a result of the endorsement. Here we take a closer look at how the scam works. So the key takeaways, let's go through this. And you'll see this all the time. There'll be literally groups in crypto that people join to take part in a pump and dump scam. They think they're getting in early, and then they get conned out of the money. So, pump and dump is a scheme that attempts to boost the price of a stock through recommendations based on false, misleading, or greatly exaggerated statements. The favored medium of communication for traders involved in pump and dump are social media platforms or anonymized messaging apps like Telegram and Discord. Well, yeah. Promoters of the scheme will then begin to coordinate rumors, misinformation, or hype in order to artificially increase interest in the security driving up its price. And often the people who are joining these groups, you're the patsy, you're the sucker that buys it at this inflated price. Then once the price of the stock has been increased sufficiently by unsuspecting marks, the promoters then sell the stock at the high price. So let's have a look here at this warning. So, the UK's financial regulator has issued a fresh warning about investing in cryptocurrencies as tokens continue to become more mainstream. Charles Randall, chair of the Financial Conduct Authority, FCA, and PSR, reiterated the regulator's line in a speech to the Cambridge International Symposium on Economic Crime that consumers investing in tokens should be prepared to lose all their money. Well, yeah, some of them are... here's the thing. If you go with trusted brands, you should be okay. But some of these shitcoin tokens, guys. Randall explains that there are no assets underpinning the price of even popular speculative tokens such as Bitcoin. Well, it's just supply and demand. The thing is with fiat, their papers, little notes that keep you out of jail. You've got to pay a certain amount of fiat every year to fulfill your tax obligations, or you'll be punished. That's the value. In reality, that's the value of it, guys. These tokens have only been around for a few years, so we haven't seen what will happen over a full financial cycle. We simply don't know when or how this story will end. As with any new speculation, it may not end well, he said. At the FCA, we've repeatedly warned about the risks of holding speculative tokens. To be clear, these tokens are not regulated by the FCA. They are not covered by the Financial Services Compensation Scheme. If you buy them, you should be prepared to lose all your money. And here's the thing with the tokens. All of these revolutionary things that are going to change. How many times have you seen a token issued and then completely replaced with a new version? Like the same issuer will say, oh, no, sorry, we made a mistake in that code. Here's a new version. Here's version 2. Your first one's now worthless. So, get this one. There's so much stuff out there that the tokens, it's like going to a arcade and buying their Chuck E. Cheese tokens or whatever, guys. I'd rather have shares in the company that has a stake in the intellectual property that they're developing, not the tokens that happens to be part of their mechanism now. And remember, there's so many of these tokens. Just think back to when there was the auto boom. All of these companies that were started and that were listed, how many of them survived? So we're kind of in the crazy gold rush right nowadays of crypto. So you got to be sensible and you got to realize what you're risking. He also warned that influencers are routinely paid by scammers to help them pump and dump new tokens on the back of pure speculation, citing a recent promotion by Kim Kardashian to 250 Instagram followers. Yeah, 100% that happens. There's crypto YouTubers that just promote complete and utter BS every time they talk about a new coin. They're paid to promote coins. We've seen it, in live streams that have messages popping up, people saying, "Oh, we'll pay you 1 BTC, 2 BTC as agreed." The watchdog is clearly horrified at the lack of controls implemented by major social media platforms and has urged them to crack down on posts which aren't clearly identified as promotions, said Susanna Steerter, Senior Investment and Market Analyst at Hargreaves Lansdowne. It reckons, given the seriousness of the situation, legislation forcing them to do so should be the solution, highlighting that the current online harms bill just wouldn't go far enough. It's estimated 2.3 million Britons currently hold this type of token. 14% also used credit to purchase, thereby increasing the exposure to loss. And 12%, around 250,000 people, seem to think that they will be protected by the FCA or the Financial Services Compensation Scheme if they go wrong. They won't. So they think they're going to be bailed out. You can't blame them. You can't blame people being trained to expect to be bailed out and the government to take care of them, really. Not in our culture these days. A Treasury consultation on the UK approach to crypto assets and stablecoins closed earlier this year, and the FCA is working closely with the Treasury and Bank of England as part of the Crypto Assets Task Force. The speech comes following a record-breaking month for crypto flows in August. Last week, Bitcoin also breached 50,000 for the second time in 2 weeks, extending a rally. Today, the largest token was trading at 51,605 by lunchtime in London, up 3% from the previous session. The cryptocurrency global market cap currently stands at 2.35 trillion, according to CoinMarketCap. So there we have it, everyone. Worries of a pump and dump. So what's the solution? What's the takeaway to this? Here's the thing. I do not really feel sorry for people who try and con others by going into a pump and dump group and then losing their money. I've got no, that's the risks. I mean, I don't even feel sorry for people who invest in crypto and lose their money. That's the risks, guys. That's what you're investing in. We're talking about people sending 50 grand to someone to develop a stable coin. It all falls over. They lose their money and they're all crying poor. That's the risks. That's business. That's investment. You're in the big boys here. If you want a regulated, stable market, do what I do. Invest in the stock market. Buy nice, boring things. Don't go in crypto. It's the Wild West. It's going to get regulated, everyone. There will be calls for regulated. The more normies that invest in it, the more people that lose money, the more calls you'll have for regulation. I can see crypto just prepping people for central bank digital currencies, and that's going to be the natural slide to it. And I know you can't ban an algorithm, but you can really restrict the abilities for people to on-ramp and off-ramp to it. That's what's going to happen. Keep an eye on Tether. What happens there is going to have ripples through the whole market. That's one to watch because it just seems nuts. CoffeeZilla can't get access to any of their documents. So yeah, I don't trust them. Do you? Anyway, guys, let me know your thoughts and opinions on this one. Thanks for watching. Like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. Sign up for SelfWealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. Take care, guys. I'll see you next time. Bye for now.